Everyone warns you about the trade that blows your account. Nobody warns you about the trade that makes you money. There was a time when I thought making money meant I was becoming a better trader. If a trade worked, I felt smarter. If I recovered a loss, I felt even smarter. And the more confident I became, the less I questioned what I was actually doing. I didn't know there was a difference between making money and making a good decision. I learned that difference the hard way. When I was new to trading, I traded almost every day. During my training, my tutor taught me to trade the news. The biggest one was NFP, the first Friday of the month. My system was simple: a buy stop above the market, a sell stop below it. When the news hit, the market would explode. One order would trigger, and I would ride the move. I had made money doing it several times. So NFP became one of the most exciting days of my month. Then I discovered gold. Gold didn't walk on news days, it flew. So gold became my NFP trade. When a system works a few times, you stop following it. You start expecting it. This particular Friday, I was sure of one thing. Gold was near its all-time high, so when the news hit, I expected it to fall. I placed a sell stop about 300 pips below the price. Gold moves 300 pips on an average day, I told myself. If it runs another 100 pips in my direction after the trigger, I take the profit and get out. Then I made one change to my normal approach. I didn't place the buy stop. I was convinced gold was going to sell, so I only prepared for the direction I expected. Here's the thing I couldn't see then. The buy stop was never for when I was right. It was for when I was wrong. And that day, I had stopped believing I could be wrong. The news came out. Gold did not fall. It exploded upward. 500 pips, straight up, without me. I wasn't in the trade. I had completely missed the move. And for the next 5 minutes, I couldn't let it go. I had expected the sell so strongly that watching the market rise without me felt like losing. Missing a trade doesn't cost you money. Your mind doesn't accept that. It treats the missed move like a loss and starts looking for a way to win it back. I was still thinking about the move I'd missed. The NFP that could have ended my week in profit. Then I noticed something strange. My balance was negative. I froze. I wasn't even supposed to be in a trade. I looked up at the chart, confused, trying to figure out what was happening. Then I saw the price climbing back up, and I realized what had happened. Gold had dropped almost 800 pips. A clean candle wick triggered my old sell stop. The order I had forgotten to delete. 2 sell positions, 0.2 lots each, no stop loss. By the time I realized I had been triggered and wanted to react, the price had moved so fast my balance was 0. The account was gone. $400. I just sat there, still trying to process what had happened. I had missed the move I wanted. Then the move I didn't expect triggered an order I had forgotten. With no stop loss, everything happened faster than I could react. The market didn't get me through the trade I planned. It got me through the order I forgot. I was angry. I had just lost $400, and I didn't have $400. All I had was about $150. Money I had saved. Money I needed. I knew what I was about to do was wrong. I had just watched my account disappear, partly because there was no stop loss, and still I deposited it. I told myself I was just getting my money back. That's what revenge feels like. It doesn't feel like losing control, it feels like taking control back. I entered a sell with 0.2 lots. No stop loss. The same mistake, right after the first one. The market was still extremely volatile. For a minute or two, it bounced around my entry. And I was scared. This was money I couldn't afford to lose. And nothing was protecting it. Then it started dropping. The trade moved into profit, about $100. The relief hit me harder than the anger had. Instead of closing, I added another 0.1 lot. The market kept moving. My balance climbed to around $300. I took some money out of the position and reduced the 0.2 lot position down to 0.1. The trade kept going. The balance reached around $500, and eventually about $550. I closed the trade. I was extremely happy. I had started the day down $400, and I had recovered it. I didn't stop there. I felt like I had figured something out. So I used another $50 to keep trading, and I lost that $50. It barely touched me. I was still walking away with around $500. I wasn't thinking about the way I had traded. I was thinking about the money I had made back. It felt like winning a fight, like something had finally clicked. I did not walk away thinking I was lucky. I walked away feeling like I had conquered the market, like I could finally read it. I believed the market could not take my money for free. The market punished the bad behavior first, then it rewarded the exact same behavior hours later. Because that second trade made money, I took it as proof that I understood the market. The loss should have humbled me. The recovery made me arrogant. That was the poison, not the loss. The loss showed me there was a problem. The recovery convinced me there wasn't one. Here's what that Friday taught me. You can break every rule you have and still make money. The market doesn't always punish bad behavior. Sometimes it pays you for it, and that payment is more dangerous than the loss. Because now you have evidence that whispers, "See, you were right." Even when the process was reckless, the result only tells you what happened. The process tells you whether you should do it again. Grade the decision, not the result. That's the lesson I should have carried forward. Instead, I carried the confidence. And the bill always comes. Mine came on another First Friday. I was still eager. The recovery had convinced me this was my arena. So I went back. This time, I was more careful. A few minutes before the news, I placed both orders. A buy stop above, a sell stop below. The way I was supposed to. I used a smaller position, 0.1 lot. And this time, I placed a stop loss on both. I didn't set a take profit. I wanted to close it myself. The news hit. Gold spiked upward. My buy stop triggered. The trade moved into profit. So I tried to close it. The market was so volatile, my close wouldn't fill. I clicked again and again. It still wouldn't close. Then the market turned. It came back to my entry and kept going toward my stop. I had wanted about a 40 pip stop. The volatility pushed through it, and I was stopped out at almost 80 pips. The trade lost. The stop loss did its job. The account survived. And in that moment, I felt it, the anger. The urge to deposit again, the pull to win it back. It was all there. I just didn't follow it. That was the difference. The first time, a loss controlled my next decision. This time, it didn't. After that Friday, I looked back at my whole month, and I noticed something. I wasn't really trading well. I was waiting for NFP, living for it. I had made one day of the month matter more than all the others. I wasn't looking forward to a good setup. I was looking forward to a jackpot. So I made a decision. I stopped trading NFP, not because NFP is impossible to trade, not because news trading is bad. I stopped because of what it brought out in me. The excitement, the urgency, the need to make money, the feeling that I had to trade that day. That's the part no one warns you about. Discipline isn't only knowing how to trade. Sometimes discipline is knowing which trades you shouldn't take. Sometimes the best trade is the one you decide not to take. I didn't stop because I had conquered the market. I stopped because I finally understood that I couldn't conquer myself in that arena. So now, after every trade, I ask one question, not, did I make money? The question is, did I follow my rules on that second Friday for the first time? The answer was yes. A loss that follows your rules is just data. A win that breaks them is a debt. The first time, I thought the bill was the money I lost. It wasn't. The real bill was the lesson I refused to learn the first time. If you've ever had a reckless trade payoff and taken the profit as proof, you're not alone. And if you've ever walked away from a trade you knew you shouldn't take, that's not weakness. That's the win. I'm not fixed. The pull is still there. I just don't feed it anymore. Because one reckless day can take your week, and one profitable lie can take your mind.